Good afternoon, everyone. My name is Steve Meredith. I'm the manager of commercial lending here at the Southwestern Pennsylvania Commission. And I wanted to welcome you to today's presentation entitled Small Business Financial Health, What It Is and How to Build and Maintain a Financially Sound Small Business. Um, the main question on a lot of business owners' minds, rightfully so, is whether or not their business is profitable. And while that's certainly a valid question to ask, I think that business owners should be asking whether or not their business is financially sound. And that question can be sometimes more complex to answer. That is why I'm providing this presentation today. And it is designed to help you understand how to answer that question. Before we get into the main topic of the presentation today, I did want to talk to you a little bit about what SPC is as an organization. We are a regional planning agency. We're a metropolitan planning organization. We're a local development district, and we're a core funded partner and fiscal agent for Southwestern Pennsylvania's Partnership for Regional Economic Performance. Now, all of that probably sounds like alphabet soup, but from an economic development perspective, we are here to help the region's small businesses grow and prosper. So today's agenda is fairly simple. We're going to tackle 3 questions before we have our Q&A. We're going to talk a little bit about what it means to have a financially healthy business, how you can keep track of your business's financial health, and what to do if you learn that your business is not financially healthy. And then we'll have some Q&A after that. So let's dive right in here and start talking about what it means to have a financially healthy small business. And if you notice me looking down at various points throughout the presentation today, I have some notes that I don't like to put on the slides, but I'd like to make sure that I remember to tell you guys. So before you go any further, I think it's important to understand that we're essentially talking about a small business's books or financials. And all 4 bullet points mentioned on this slide are of equal importance. Keep in mind, if math doesn't come easily to you, that's perfectly fine. That you're looking at a guy who has a music degree. Math was one of my least favorite subjects in school, and somewhere there is God or a higher power or something like that, and he or she is looking down at me laughing, saying something like, "Oh, you thought you had a plan for your life. Think again," because I do plenty of math on a daily basis. But the point in illustrating that is that you should find somebody who is good at math and put them in charge of your company's books, or hire an accountant. And a lot of times small businesses, especially in the startup phase, don't have money for an accountant. So a little bit later on in the presentation, I'll show you one of the forms that you can maintain to help you find out whether or not you have the money for an accountant and what expenses you can cut into to make room for such an expense. So let's take a look at the 4 the 4 aspects on this slide. To have a full understanding of your business's financial health, you need to have an understanding of income, expenses, cash flow, and current and long-term liabilities. Now, before I go much further, I do want to point out that cash flow does not equal profit, and we'll talk a little bit further about that later in the presentation. But cash flow and profit are 2 separate things for the sake of this presentation. I put current and long-term liabilities on this list because they are 2 different types of liabilities, but they should both be listed on what's known as your company's balance sheet. Current liabilities are those that are to be settled in cash within the fiscal year or operating cycle of a given company. Things like accounts payable or money due to suppliers for goods and services rendered, notes payable, or an agreement between 2 parties in which one party agrees to pay the other party a certain amount of cash. That's a current liability. That needs to be paid in cash in the business's current operating cycle. Okay. There's also a concept known as the current portion of long-term debt. That is the current portion of money that you need to be able to set aside in your current operating cycle that's going to pay for things like your current mortgage payments. So you might own a business that has a building that you own as part of that asset. That building's mortgage is spread over a certain number of years, whether it be 15 years, whether it be 30 years. Whatever portion of that mortgage that is going to be paid in the coming 12 months is the current portion of long-term debt on that mortgage. So that's current portion of long-term debt. That is classified as a current liability, which is different than a long-term liability. Long-term liabilities are companies' financial obligations which are due more than 1 year in the future. Things like your business's mortgage loan principal after the current year that you're in. Okay? So, tracking your business's financial health. You need to maintain 3 basic documents. Your profit and loss statement, which is also called your income statement, a cash flow statement, and a balance sheet. And these 3 documents can be updated monthly, quarterly, or annually. But what I will say is the more frequently you update these 3 documents, be it on a monthly basis, I think the more solid grasp you're going to have on your small business's financial health. And I do want to mention here, I did see somebody raise their hand. I'm not ignoring you. We will have a Q&A at the end of the presentation here, so hold that thought. I will get to you in just a moment. For today's session, before we go into the individual documents, the profit and loss statement, the cash flow statement, and the balance sheet, I don't want to get too bogged down into the details of each statement. I have made this presentation, I've given this presentation both in a webinar format and in person. And one thing that I've found that makes it a little bit easier for the attendees to understand is when we don't use example companies. Okay, and the reason why I don't use example companies is because an ice cream parlor is going to have different income streams and different expenses than a dry cleaner. Okay, and if you are looking for an entity to help you understand what needs to go on your profit and loss statement, what needs to go on your cash flow statement, or what needs to go on your balance sheet, I would strongly suggest that you contact your local small business development center to go through those aspects of your business financials, because they're going to have the expertise to know what kinds of items you need to list on your profit and loss statement, what kind of specific items you need to list on your cash flow statement, and the specific items that you need for your specific business to list on your balance sheet as well. Okay, so moving right along, let's jump into the example statements. The first one that I always like to start with is a sample profit and loss or income statement. And this is because I think this is the easiest of the 3 financial statements to understand. Simply put, you're going to be adding the income for the period and subtracting expenses. And what you have left is what is known as your net operating income. Okay. This document can help you understand the expenses that your business incurs and can help you cut back on certain expenses in order to either increase profits or perhaps make room for another expense that might be more crucial. For example, if you are the one who is stuck doing your business's books from a month-to-month perspective and you want to hand this off to a certified public accountant, if you take a look at your profit and loss sheet and you're taking a look at your expenses that you're incurring, you can decide which expenses you can cut down on to make room for that more crucial expense of bringing in a CPA. For startups, I think it's important to mention that you may operate at a loss for the first year or the first couple of years of your business's existence, okay? And how you tell whether or not you're operating at a profit or loss. If you're operating at a profit, the number here will just be black, okay? If you are operating at a loss, it is often reflected in parentheses. So if you are operating at a loss, the number will occur in parentheses. And you can see what kind of severity of the loss that you're operating under. The trick is, if you are operating at a loss in year 1 or year 2, the severity of that loss should be decreasing, okay, until you get to the point where that number is outside of parentheses, meaning that you are turning a profit, no matter how small of a profit it could be, okay? So just keep that in mind for startups. We understand that it's very hard to earn a profit in the first year of existence, but by year 2 or year 3, you should be decreasing that loss and eventually turning a profit. The next sheet that I like to take a look at is the sample cash flow statement. A cash flow statement is an indicator of how much cash you have on hand to pay your business's bills, okay? The main items that should be listed on a cash flow statement are as follows. Cash flows from operations or operating activity, okay? These include receipts from customers as well as disbursements to suppliers and employers. Cash flows from investing activities a little bit further down, okay? That's such as the purchase or sale of equipment, all right? And then finally, cash flows from financing activities, taking long-term loans or paying dividends to owners, okay? The reason why I say cash flow does not equal profit is because I hear this a lot from different small business owners. Sometimes small business owners will come to me and they'll say, maybe I hit the Powerball when I was younger, or maybe I'm more interested in the social impact of my business, okay? And they'll say, I'm not interested in how much money my company makes, okay? Or yeah, I'm not interested in making money is sometimes what they'll say. I can understand what they mean. What they mean by that is that they are not motivated by their company's profits. But at the end of the day, no matter if you are driven by your company's profits or not, you need to be able to make a certain amount of money to ensure that you have the cash flow to maintain operations. Cash flow is the lifeblood of any business because it pays bills, okay? So even if you are not driven by your company's profits, you need to make sure that you have the cash flow to meet your bills to maintain operations. That is why I say cash flow and profits are two different things, okay? Finally, the third financial document that you are going to want to maintain is something known as a balance sheet, okay? A balance sheet is a financial statement that contains details of a company's assets or liabilities at a specific point in time, okay? Assets can be defined as anything that a company owns that has value and can be used to meet debts or obligations, okay? Let me repeat that. Assets are anything that the company owns that has value that can be used to meet debts or obligations. An example of these assets that are typically listed on a balance sheet are cash, current balance of business checking or savings accounts, accounts receivable, inventory, or the value of fixed assets that a company owns, like land or equipment. Part of the reason that SPC is providing this presentation is because we are an asset-based lender, okay? Which means that we help you fund buildings, land, machinery, equipment, or related working capital. And in the event that one of our borrowers fails to make enough payments on their loans, one of the things that we are going to do is seek to remedy that problem, first by working with the borrower to come to an agreement as to a payment plan. But in the event that the borrower is non-responsive or does not respond to our emails, our phone calls, things like that, we're going to look into liquidating your assets. And some of the assets that have value, that add value to your company, are things like buildings you own or equipment. And we will place a lien or ask you to take a mortgage on any building that we're helping you finance or any equipment that we're helping you finance, so that in the event that the loan does default, we can collect proceeds on those assets. Like I said, those assets add value to your company, okay? That's why they're called assets. Liabilities, on the other hand, are debts or other financial obligations for which the business is responsible, okay? This can be broken down into, like I said, current and non-current liabilities, current or long-term liabilities. Common current liabilities listed on a small business's balance sheet include, but are not limited to, accounts payable, lines of credit, payroll liabilities if you owe your staff salaries or owe them hourly wages, and taxes payable. Non-current liabilities are typically listed in a separate section on the liabilities side or under the asset section of the balance sheet. And they can include, but are not limited to, long-term loans and the mortgage on the business's building. At the end of the day, as the title suggests, the amounts on your balance sheet should balance. So whatever you say the total liabilities and owner's equity is, should equal the company's total assets, okay? Now, in a perfect world, they would balance, but we, as the one ad campaign used to say, we live nowhere near perfect. So sometimes you will find your balance sheet is out of balance. And you might ask yourself why. Well, there are a couple of common reasons why. The first being the misclassification of an asset or a liability. Claiming an asset or reporting an asset as a liability or vice versa. Sometimes it can be as simple as a transposition error. Maybe you say that you have a total of $398.95 in inventory when you have $398.59. That's a common transposition error. So check those before you panic when you're doing your balance sheet for the first time, okay? Now, how do we cure a financially ailing small business? There are three main ways. Obviously, you can sell more goods or services. I call that hustling. You can obviously raise profits just by getting rid of more inventory. You can also, what I call, work smart by reducing your expenses. That's why something like a profit and loss sheet is so crucial, because it gives you a 30,000-foot view of what your expenses are and what is really costing your bottom line at the end of the day. And then finally, another way to work smart is to pay down debt. Now, the last bullet point on this screen is not to be afraid to ask for help. For those of you who have attended my webinars in the past, or for those of you who might be watching on demand, I toot the SBDC horn all the time. They are great for startups. They're great for existing businesses. I would start there. If you have created your business plan, if you don't have a business plan, if you've been in business for X number of years and you never thought you'd need a business plan, let me tell you something. As a small business lender, I can tell you right now, you need a business plan and projections to qualify for an SPC loan or a traditional bank loan. So no matter where you are in the business life cycle, you can always reach out to a small business development center and get their assistance. And if you need assistance getting in touch with them, please reach out to me. My contact information will be at the next slide. Another organization that I don't know a lot of people know about is the Service Corps of Retired Executives. This is an SBA affiliated organization where, as the title suggests, they are retired executives that have walked the walk and talked the talk of owning a small business. They can really give you some valuable advice about the day-to-day operations of running a small business, as well as, how far into the future can you look, and how to adjust in case anything happens, like a once-in-a-100-year global pandemic. It's not like we've had one of those in the last 2 years. I mean, a lot of small businesses during the COVID-19 pandemic really had to pivot. And, that's a common occurrence for a lot of small business owners. For women-owned small businesses, the Chatham University Center for Women's Entrepreneurship is an excellent resource. Similarly, if for veteran-owned small businesses, the University of Maryland Veteran Business Outreach Center, or VBOC, again, another SBA-affiliated organization. You might be thinking to yourself, well, the University of Maryland is in College Park, and that's kind of far away. The reason why I list them is because the University of Maryland VBOC is responsible for assisting businesses in Maryland, Pennsylvania, Delaware, DC, and New Jersey, I believe. Those five states. So they are your local affiliated VBOC. Okay, and then finally, the Southwestern Pennsylvania Commission, as I mentioned, provides small business financing for startup and expansion activities. Like I said, we finance buildings, land, machinery, equipment, or related working capital. So we can certainly help you there as well. And with that, I will get to the Q&A portion of this presentation. Now, I did see somebody had a raised hand. I don't know if that person put their hand down, but if you have a question and would like to raise your hand, or if you would like to put it in the chat function, I will double check the chat function there. Okay. Charlie Fredrickson, I don't see any slides. Well, that would be unfortunate because I can see the slides. Charlie, you know what I'll do? If I have your email address, I will email you this slide deck. Really hope everybody else could see the slides as well. If you can't, like I said, for anybody that attended today, I will share the slides with you so that you could finally see them. Let me see if I can stop my share. It says here I'm sharing my PowerPoint, so you should be able to. Okay, good. All right, wonderful. Okay, wonderful. Okay, so some of you can see the slides and some of you can't. If you can't, or if you couldn't, my apologies. I will email them out to you. For those of you who cannot see the slides, my contact information is here. The best way to get a hold of me is probably via email, which is smeredith@spcregion.org. We also have a new online loan application that features a pre-application questionnaire. So if you go to this link, spcregion.portfol.com/workflow, this link is also in the signature line of my email in case you want to go there after I email you, Charlie. You can sign up for a free account and then you can fill out a pre-application questionnaire. That will help you find out if you are eligible for an SPC loan, and it will help me find out if you're eligible for our funding as well. What will happen is you will submit an online application questionnaire, and I will get an automated email that says, hey, you have a new one to review. Please reach out to this person within 72 hours, which I will do my best to do. And then finally, I also have my LinkedIn account here for anybody that wishes to connect with me on LinkedIn. And Charlie, like I said, I will send you the slides. I'm sorry that you couldn't see them, but hopefully you'll be able to take a look at them then. And hopefully you still got a lot out of today's presentation. If you have any questions for me, let me just do one more check of the chat. They may need to go to layout and select stack. Okay, that's a good that's a good tip from Darnita. May need to go to layout and select stack. So I thought that everybody would be able to see the slides. And again, for those of you who aren't able to see the slides, and for those of you who are not watching this live, I am recording this webinar. So this will be available on demand, and I believe the on-demand recording is capturing the slides. So you'll be able to watch that at any point as soon as it's uploaded to our YouTube page, which it should be done in the next day or two. All right. Well, if nobody else has any other questions, I do want to thank you for your participation today. Like I said, I'll be posting this, we'll be posting this webinar on our SPC YouTube page. And probably within the next few days, so you should be able to view it at that point. But if you wanted to ask me a question offline, smeredith@spcregion.org is my email address, and you can feel free to reach out to me at any point. With nothing further, I thank you very much for your participation. You have a great day. Thanks.